Hey everyone, happy Thursday, October 12th. It's about 11:45 on the West Coast and time for another market updates. Going back to last week, we talked about the big Friday BLS job report was coming out for September. We were hoping that number would come in our favor, which means a lower number. But according to the headline number, at least, that was estimated to be 170,000 jobs created and came out at 336,000. So let's take a closer look at these numbers because it's pretty interesting. Unemployment stayed at 3.8. That comes from the household survey. But the 336,000 number comes from the business establishment survey. They also added 119,000 jobs in positive revisions to July and August. In this BLS jobs report, we've seen a lot of negative revisions lately, which is one thing. But positive revisions is bad for us, and it's just again interesting these revisions that they have to make it at all. It just makes the data not very trustworthy. And if we take a closer look, like I said, 336,000 jobs were created compared to 170,000 estimated. And then the revisions of 119,000 were all from government job increases. But if you look at the raw numbers, the non-seasonally adjusted, it was actually negative 885,000. So the September government job gains, 70,000% of those were teachers. So that makes it a bad seasonal adjustment. The seasonal adjustment should pick up on the fact that teachers go back to work in September. And then retail showed up 20,000 jobs created. But according to other reports, a little bit more current reports, like the Challenger Job Cut reports, there's been a big rise in layoffs in retail. So that doesn't really jive. And then leisure and hospitality are up big in the BLS, where hotel occupancy has fell according to all the metrics, according to their industry at least. Their numbers are down, but according to this BLS job survey, leisure and hospitality jobs are up. So again, just some interesting things, when you look at these numbers a little closer. And then you look at the household survey. So this is where they actually call people. This is where the unemployment number comes from and so forth. So again, that stayed at 3.8. That showed 86,000 jobs created, which is a lot more reasonable. That's a lot closer to the ADP number and all the other reports compared to that 336,000 job number. And when you look at the breakdown, full-time dropped by 22,000. That means full-time has dropped by 692,000 over the last three reports. And the last three times this happened, it's all been recessions. It's 2001, 2008, and COVID. Part-time job owners or holders went up 151,000, and then multiple job holders went up 123,000. So again, you look at this household survey, it doesn't look as rosy as that business survey, which is all done on projections. This shows a lot of people not having full-time work and getting part-time and multiple jobs, so which doesn't scream strength for the job market. So that was not reacted, but overall, people are going to react to this headline number, and the markets did not like that on Friday. This week, today, actually, we got the September CPI. So let's take a closer look at that. This is, again, the next most important thing besides jobs right now is inflation. The Fed wants inflation down, and they're paying really close attention to that job market. So the CPI came in a little bit hotter than expected, which the markets are not liking today. The headline was supposed to come in at plus 0.3% month over month. It came in at plus 0.4. The core came in right as expected, plus 0.3%. But like I said, overall, that headline number popping up. Core, came down, but not as much as expected. And really what it came down to on the core number, at least, and is the rising, or in the headline number is gas and energy prices. In the core number, there was a pretty big jump in not shelter costs, rent and stuff like that, but a big jump in staying away from home. So things like Airbnbs and hotels, which again, if you go and look at their metrics, they're not doing well. Airbnb's not doing well. Hotels are not doing well. So that doesn't really jive, but there was a big jump there that kind of bumped that core up, or else we'd probably come in at about 4%, which would the market would react a lot better to. So CPI came in a little hotter than expected. Not good when we know the Fed wants to get that core inflation number down close to 2%. The next one we got on the inflation front was we got PPI earlier this week or on Wednesday. So that's the producer side of things. So before it gets to the consumer and the cost for the people to make the goods, and that came in hotter than expected, a lot hotter than expected. It went up 0.5% in September when it was supposed to be 0.3%, and the core went up 0.3% when it was supposed to be about 0.2%. So in graph form, as you can see, we're always right about here. Pandemic with the cost to do things, it went so high up, and then it's been a downward trend. Last couple of months, though, we've seen this pop back up again. And they also on this one, they made positive revisions. They made these numbers higher in the last month than they were previously. So again, we don't like seeing inflation going up. It just gives the Fed more reason to say, hey, we're going to hike again and so forth. So jobs didn't go in our favor this week. Inflation didn't go in our favor this week. Initial job claims came in at 209,000. The estimate was 210,000. Still seeing at really low numbers. Continuing claims peaked up to about 1.7 million. So again, it just shows that employers right now are trying to hold on to their employees. So the job market continues to stay tight, which plays in the Fed's favor as far as their whole strategy. So miscellaneous stuff. So a couple things. So Fed talk. So even given all this going on, we've heard some talk coming out from the Fed recently where they're basically acknowledging from at least some of the members that, hey, the markets might have done their work for them. Maybe they don't have to hike because the markets have tightened so much. We've seen, mortgage rates go up quite a bit over the last couple of weeks after their last meeting and the comments they made. Well, the same thing's happening in the bond market and everything. So the Fed's looking at this and saying, hey, basically the markets are tightening on their own. Maybe we don't have to hike, and that is the correct thought. Like we've talked about, these hikes don't happen overnight. It takes a while for these hikes to take root in the economy, so they need to let that play out, and they should not hike. So the Fed is starting to say good things. I think except for one still wants to hike, but she's wrong. And the next thing, global events. Obviously, horrible things happening over in the Middle East. This has actually ended up being a positive for the bond market, unfortunately. There's always a flight to safety when there's unrest globally. Same thing happened when Russia-Ukraine broke out. People take money out of more volatile markets and put them in bonds. So that helped bonds, at least the first couple of days of this week. That was the Fed having more dovish talk, saying things we like, and those global events, all that unrest in the Middle East, basically made bonds get a little bit better. But again, horrible thing that happened. Average 30-year conventional down from 7.69 when we talked last Thursday. That actually went up to about 7.87, I believe, on Friday after that BLS jobs report came out, and down to 7.65 up today because, again, that those inflation numbers, the markets are not liking. But, could have been worse, I guess. And then last thing, important Fed date, the Fed meeting coming up November 1st. We don't really have any big inflation or big job numbers before then. We're going to have the initial job claims, things like that, but no big numbers before then. Right now, the markets are saying 90% chance or so that they will not hike, 10% chance they will hike. But, these inflation numbers and these job numbers aren't really playing in our favor. So hopefully the Fed, the talk that they're, these speeches they've been giving, basically acknowledging that their work might already be done and they should wait. Hopefully that is what takes a precedence over some of these job numbers and these inflation numbers, which aren't playing in our favor. So, hope everybody's having a good week. We got to stay positive. These things go in cycles like anytime. It's going to make sense for some people to buy right now in a refi, and it's not going to make sense for others. So you always got to look by case basis, whether or not you're a borrower or a realtor, and just kind of do what's best for yourself and your client. So if anybody needs anything at all, please don't hesitate to reach out. I'd be more than happy to help. Have a great day, everybody.